Okay, so today I want to talk about how do you identify institutional buying and selling. Okay, you guys are in for a treat because this has been one of the topics that we always wanted to cover, but we haven't got to it. So today we'll show you exactly how do you identify institutional buying and selling. Okay, now if you're new to our channel we actually talk about Forex trading and we share a lot of insights as to the lessons we learn from not just our own mistakes as well as lessons that we learn through attending courses from other traders, right? So we release videos almost every week. So if you're new, make sure you subscribe to the button. Okay, so let's get into today's content. Okay, so when it comes to institutional buying and selling, there are two specific things that we look for. Okay, let me just run through with it. Okay, so the first thing that we look at is actually the departure of the level. Okay, not to worry, I'll go into this. Let me just type it out so that you're able to see it. Okay, so number one, we look at the departure of the level. Okay, second thing that we look at is we look at the time spent at a level. Okay, so these are the two things we look at when it comes to identifying whether there's actually institutional buying and selling at a level. Okay, so let me just go through the first one. Okay, so the first one is departure of the level. Okay, so when you look at a chart, you have to ask yourself this question. Did price actually explode, impulsively in a single direction of a level? Okay, now what do I mean by this? Let me just show you an example over here. Okay, over here, this is actually institutional selling. Okay, how do I know? Look at our first factor, departure of the level. Look at how price departed from this level. You have one big bullish engulfing pattern over here. You have another big candle down, and you have another one over here. Okay, if you look at this one over here as well, there was also institutional selling over here. Okay, you look at the sell down. Okay, so the first factor is departure the level. Okay, let me see if I can find you more. Okay, this one as well. Okay, after this over here, you have this big movement. Okay, so the first factor is a departure of the level. Okay, so basically you want to look for explosive price movement of a single direction. Okay, one direction. Okay, just think of it this way. If institutions are, they are buying or selling very heavily, then you won't expect price to, stay there, be, constipated like this, for example, over here for a long time, right? You expect the movement to be explosive because they are buying or selling in very big volume. So you expect price to move very fast. In this case, you realize that price doesn't even bother to do a pullback. It doesn't even sell down and pull back. It just starts selling down non-stop, right? So that is the first factor, which is the departure of the level. Okay, the second factor that we look at is actually time spent at a level. Okay, so if you can look at this case study over here, or rather this region that I highlighted, okay, you notice that it's consolidating for one candle, two candle, three candle, four candle, start selling down. Okay, as a general rule of thumb, let me just write it. Just a moment. Okay, as a general rule of thumb, you want there to be less than 6 candles or less. Okay, so if you see, for example, let's say you look at this region here, it's kind of like a mess, right? Because this entire consolidation here, it's you know, it's so many candles, depends on how you count it, but either way, no matter how you count it, it's still more than 6 candles. Okay, One more thing to also note is that maybe I'll just add it here. The other factor that we also look at is you want tight bodied candles. Okay, basically means you want a tight range. So if you look over here, okay, you realize that the candles are relatively small. The range, right, the whole range of this consolidation is rather small and tight, very compact versus this here. Okay, and if you compare the departure of this level, it's very weak. Okay, it's very weak. This is very compact, tight, and you see the effect of this. Okay, so that's how you identify institutional buying and selling. Okay, maybe let me just go through some more examples so that you have a better idea of what um, institutional buying and selling looks like. Okay, so maybe I'll use the day chart. Okay, this is Aussie dollar. Okay, look over here. This, my friends, is institutional buying. Okay, so let's go through the factors again. The first factor is we are looking for strong departure. So ask yourself, did price depart strongly from this? Definitely. I mean, if you look at this departure and you tell me that this departure is weak, there's something wrong. Okay, this is definitely a very strong departure. In fact, there is all bullish candle. There is not even a single bearish candle. Okay, so this over here is kind of like where the institutional buying started. Okay, so you kind of see strong impulsive move in one direction. Okay, look at the time span at this level. This is just a single candle. In this case, we're in a day chart. So this is just a single candle. Okay, and then you have a nice engulfing pattern over this this bearish candle. Okay, so you look at the departure. So this is a very strong institutional level. So definitely, if price comes back here, I'll be very keen to buy because this is a very strong level. Okay, if you compare this to maybe movements like this, okay, you see that this is, you know, it's really it's a long doji, right, and it's not compact, and you know, uh, these are levels which are not very you don't really see much institutional selling over here. Okay, so let's go through more examples. Okay, so if you can look at over here, okay, this is also another good institutional buying level. So same thing as always, look at the departure, one candle, 2, 3, 4, 5, 6, 7, 8. 8 candles of consecutive buying. Okay, that's 8 days. Okay, 8 days is almost 2 entire trading weeks, right? Because one trading week is about 5 days. So 8 is about, you know, it's almost 2 weeks. So that's a very strong buying. Okay, and the time span over here is only an hour. Sorry, not an hour, a day. So this is a very strong level. So look what happened when price came back to this institutional buying level, right? it, it, it had a bounce, right? So this is how you identify. Once you identify institutional buying or selling level, you want to look for clues to enter the market at that level, right? Because it's a very strong level. Okay, but please do not just you know, take what I say out of context and just this institutional level, I'll just buy it here. Okay, this is just helping you identify levels. Okay, it's not a trading strategy on its own. Okay, a trading strategy has to be more it has to be more complete. You must have your entry rules, you must have exit rules. Okay, if you need a trading strategy, check out the day trading guide that I have for you in the description below. Okay, what I have prepared for you is a free day trading guide that works. Okay, it's totally free. It has a lot of value. It gives you the strategy. It teaches about candlesticks. It has a candlestick pattern cheat sheet, right? If you're new to trading, definitely download a free copy of it. It's totally free, right? I do not charge you a thing for it. Okay, and hopefully you get some value from it. Okay, so I'll just go through one last example. Okay, maybe I'll do a bearish one since I have been doing a lot of bullish examples. So in this case, okay, look at this over here. Okay, you can see same thing. Look at the selling involved. One candle, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. If you count all the way to here, it's 13, 14. But I mean, you get the picture. It's a very, very strong selling. Okay, this is definitely the work of institutional traders. Okay, one more point to note about this particular case example, it's actually price actually did a fake out of this high here. Okay, let me just draw it for you. Okay, so sorry, let me just okay. Right, you see price did a very strong bullish breakout of this level only to sell back down. Okay, so this is what is commonly known as a fake out. Okay, institutional players love this. Okay, because you for institutional players to make money, you have to lose money. Okay, you have to understand that the forex market or any market, right, be it the stock market, the commodities, or the index, it's all a zero sum game. So what do I mean by zero sum game? What I mean by zero sum game is that for you to make money, someone else must lose money, right? So for the institutional players to make money, they must sell it at a price that you are willing to sell it at, right? So if you are, as a retail trader, you are buying this breakout, then technically you are selling Aussie dollar to the institutional traders. And that's how the institutional traders actually load up on their positions at the best price. Okay, it is possible to catch this high, okay, though it requires a lot more skill, and that's not the topic for today. But I mean, since we're at it, I'm going to explain to you about it. Okay, but anyway, this is actually institutional selling. Okay, and as you can see again, the departure is just it's just phenomenal, right? You don't see price, like consolidating up and down over here before it starts selling down. It just sell down immediately. Okay, so the other thing you also note is that this time is actually one candle here only. This is kind of like a piercing pattern, and then it starts selling down. So as I said also, it doesn't really consolidate, it just sells. So that's a very strong level. So what's interesting is that when you move to the right and look at the charts, you realize that the spike high, when price went back here, it almost touched this level. Okay, if you draw it to cover this candle body here, and you pull it, pull it here, you realize that price visited that level almost to the point, okay, and then it starts selling down again. Okay, so again, I'm going to reiterate, right? This is not a trading strategy on its own. So please do not just say, oh, I learned from this guy on YouTube, they call themselves experts, and, they say that, oh, this is the institution is selling and I'm going to sell here. No, guys, do not trade like that, okay? If you trade like that, you are going to blow your account. And that's not what I want for you, okay? So I think that's it for this video. If you have any questions, as always, please leave a comment below. We'll try our best to address it. Okay, and if you have not downloaded your free trading guide and you're not part of our Telegram channel, do that. Okay, these links are in the description below. It is all free. Okay, until then, we'll see you in the next video.